Morning, everybody. Thanks for joining us on a cloudy Tuesday morning. This is my first Milken conference, and I've been really encouraged to ensure that we have a debate, which is like a fight without the physical violence, as far as I can work out, and also been encouraged that we should focus on solutions. So maybe the title of today's panel, shouldn't be making the case, but maybe should be, is there a case to be made? Maybe it should be, if there is a case, then why on earth are we not doing a huge amount more than we're already doing? So I've recently joined the company in the US. So I've been working for AECOM for 7 years. And I don't know if any of you have ever been in the position where you've been offered a new job, you have to take your family overseas, and somebody sort of dangles a carrot in front of you. Maybe you've moved across the seas, Susan, maybe this happened to you. It's going to be great over there. So before I came across to the US, I was told that there's this enormous infrastructure gap, widening every day, that people increasingly are recognizing that to be the case. I was told that there was this huge pot of private capital ready to go, shovel ready, absolutely, and possibly even boosted by a potential future tax bill. And just about to happen was an enormous federal push on infrastructure funding. What a great time to come across and lead the world's leading transportation integrated infrastructure design company. So I arrived, and I've spent the last 6 months going around more than 20 cities, and I find there's an enormous infrastructure gap, and everybody knows about it. I find enormous private sector capital ready to go. The tax bill has happened. I find surprisingly few, very surprisingly few PPP projects in train compared to other countries I've seen. And I've been looking everywhere, and unless I've missed it, I can't find the federal bill. So here we are with a real issue, and I think this is one of the biggest issues for the country as the economic development increases, and we know this, so the gap increases, and we've got to do something about this. So the panel today, and one of the things I've also appreciated about Milken is the quality of the panels that are formed, both in terms of their balance and their capability. And ladies and gentlemen, this one is setting the standards even higher. So it's my delight to welcome a great panel. Governor Snyder, Rick Snyder from Michigan, fantastic Twitter handle, One Tough Nerd, which I really appreciated, being a nerd myself. And during Governor Snyder's administration, the state has successfully done some of the things that I think the rest of the country needs to copy. So I think we've got a lot to learn there. Susan Gray, who's got more globals in her title than almost anybody ever met, but she's the global infrastructure lead at S&P Global Ratings, has been in and around this area for over 20 years, a very experienced economist, a very experienced advisor to many governments. To my left, I was slightly hoping to have a panel where I could sit at the end and I didn't have to challenge my neck too much. But to my immediate left, Mike Sommers, somebody who spent 20 years right on the Capitol, right in the middle of the infrastructure debate, and has a really great view of the current political scene. And to my far left, John Tanyeri from MetLife. So this is a panel, I think, that can cover every possible angle. But I'd like to start with you, Governor Snyder. So you've had success. I mean, what is it been that's brought that success? How have you managed to achieve projects like Gordie Howe, which has been a huge achievement?
Yeah, well, the Gordie Howe International Bridge is the best known because it's a huge project. But I actually have to thank my Canadian partners for that. We in the U.S. are behind. Canada, parts of Europe, other places in the world are far more advanced on this. And so I appreciate it. It's been a great learning experience in this particular context, and it's the right way to do this project. It will be the busiest commercial crossing between our two countries. So it's about job creation, and to do this mile is critically important. From that, though, we've leveraged that into other learning experiences. In particular, we've done a couple lighting programs The freeway lights in Detroit, we've done at the state level. I signed the bill to set up a public lighting authority in the city of Detroit. The lights are on. They're working well because it shows the value of a P3 because it's about performance. It's not just about government doing work. We have private partners that we're holding accountable and they're performing. And that's the way it should work in an efficient use of capital because we have underinvested in infrastructure in our country and we need to do more. We're putting out a huge project now for I-75, one of the busiest sections of freeway in our entire state, to make it not just a design build, but a maintain model. And it could accelerate the project a number of years and do a better job of maintenance long term. So I'm embracing this, but as we talked about before this, in many cases Americans still don't really understand the concept of a P3. So I think it's incumbent on us about doing a lot more marketing and education of our citizens.
And in those projects that have been successful, how have you done that? How have you managed to portray that you're getting the right balance between public and private sector risk-taking? How have you won people over?
Yeah, well, a lot of it, I came from the tech field originally. That's part of the nerd thing. And there's an adoption curve to new ideas. You have early adopters, fast followers. Most people are in the middle, and then you have people lagging behind. And what I would say is when you talk about a P3 to someone in theory, it doesn't sink in to most of us. When you can talk about a freeway lighting project or a street lighting project, and I can show them the lights are on and how it's cost us less money, that's when you get these inflection points. So what I encourage people to do in this model in particular are find real pilots. Don't go for the biggest, most complicated thing. Just find something that works, that then you can go to your citizens to say, this is how it works, and they can tangibly see it. Then it becomes real, and that's how you get that adoption curve happening in the middle.
Yeah. Okay, so Susan, you've got a big team that looks at the investment risks associated, with putting these teams together. I mean, what sort of things have you seen that have really worked, and how do you and your team help to get people to balance these risks out and make the case?
So we have 135 analysts around the world who look at infrastructure transactions, and we've probably looked at over 2,500 over the last 25 odd years. And the key principle with the P3 is that it transfers risk to the party who's most able to bear it. And that party can then look at how they actually mitigate that risk. And in a typical situation, the government's going to look at procurement, the government's going to look at land acquisition, they're going to look at approvals, they're going to run the procurement. The equity party is going to take on the risks that are transferred around performance and delivering the fit-for-purpose asset under the concession. And contractors are going to undertake to provide the fixed-time, fixed-price contract, the level of performance that the asset needs to achieve. And operation and maintenance is going to also be contracted, and long-term maintenance costs are going to be picked up in the overall project. So the key thing here from a P3 perspective is by actually looking at these risks and quantifying these risks, you actually value them and you look at how you're going to mitigate them. And that is a valuable process for the public sector to go through when it procures infrastructure. So generally, P3s overall have been quite successful. When we look at the cumulative default rate for BBB assets that we've rated over the last 10 years, the cumulative default rate is just over 1.5%, which is relatively low. So I think the area where P3s tend to falter is more in the procurement process, where the approval process drags out. You end up with a change in political support for the project. You don't have the alignment that you need with the community. Back to Governor Snyder's comments about why are we building this? What's it going to deliver? And we did some work a couple of years ago where we actually looked at 10 projects under various stages of procurement and operation in the US and asked the community around them what they thought about the projects. And on a 9-to-1 basis, they were positive or very positive about the impact of the project. They understood it, they understood the employment impact, and so on. And so it's the issues around procurement and getting the benefit of the private sector's technological capacity to innovate, to think about the long term, to take into account life cycle costs that we really need to be focusing on, and that we certainly focus on.
So John, you've got. I mean, Governor Snyder was making the point earlier that here in the US we're behind in many cases. Other parts of the world, you've got a great view of the whole world of PPP. I mean, what do you see in other countries that we could learn good and bad? What else do you see?
Sure. So when you look at our overall portfolio, it's currently around $18 billion. Ironically, more than 65% of that is domiciled outside of the US. Fundamentally, the reason for that is when you look at how infrastructure decision making is done, it's been done more on the federal level or the sovereign level. And in Canada, obviously, it's done at the provincial level. And so that decision making, obviously, is less tangled, easier for infrastructure to pass through. Well, we were on a panel yesterday, and one of the comments that was made in the audience as well as on the panel itself was that when you look at the US and the fragmented nature of how decision making is done, all of the infrastructure decision making is done at the state level or the municipal level. And so the lack of standardization, the lack of really choreography between states sharing best practices makes it extremely difficult. When we start, looking at 3Ps, it fundamentally began in the UK under Margaret Thatcher when she was pretty much fed up with some of the high costs that she had been seeing from some EPC contractors. And she decided to really entail on a full-scale privatization of a number of infrastructure assets. That program was quite successful in really moving the infrastructure effort to the forefront. That model was then picked up by the Canadian infrastructure partners, and when you look at Canada in general, they have a long list of bankable projects, a really good 3P program that is vibrant. And actually, when you look at what they've done to make it successful, and I think the governor has said this earlier, is that they have some standardization. They know exactly what they have to do to move that project through. They are also able to deliver and transfer the risk from the public entity to the private entity appropriately, but probably what's most important is show the actual taxpayer, the individual, the benefit from moving that risk transfer from public hands to private hands, and how it will actually benefit from a socioeconomic impact, but ultimately to the taxpayer itself. We hope that in the US that 3Ps will take place. I think there are a few states here that that do it well. Florida, Virginia, and obviously Michigan's done a great job. We've invested in a number of projects there. But we hope that there can be some best practices, as the governor had said, to move this effort forward.
Yeah, thanks, John. So Mike, you're the president, the CEO of the American Investment Council. So you spent the last 20 years or so in Washington. How do you think the current political situation maybe is affecting the case for private sector investment?
Yeah, so we began this administration a few years ago, and I think that the best analogy that I can make as to what this has looked like on the transportation side is it's kind of like an ambulance in Midtown Manhattan during rush hour. Lots of noise, lots of sirens, but really not a lot of movement. And I think the consequence of that, of course, is we're not going to see the kind of significant infrastructure improvement or infrastructure legislation just because of kind of a real political dysfunction that exists in Washington, D.C. But that's not the only issue. The other issue is that you're starting to see what I think is also occurring at the state level, which is a significant crowding out of infrastructure priorities because of other priorities taking the priority that this administration and this Congress have pursued. So you have a big omnibus appropriations bill that busts the budget caps. And it did significant deficit spending. It had some infrastructure spending in there, but not nearly what this nation needs. When you look at outside analysis, the suggestions are that you need about $4 trillion to update America's infrastructure. So where does that money come from? And of course, you're having that exact same problem at the state level too, whether it's Medicaid or pension obligations. You're seeing this all over the country. So where does the money come from? So one of the things that I've worked on since I left Capitol Hill is I'm president and CEO of this group called the American Investment Council. This is a group that represents the major private equity firms in the United States. So these are firms that have raised significant capital in infrastructure funds over the course of the last few years. In fact, they have double the money that they had in 2009 in these funds. And how do you deploy that capital? What do you need to do to get that capital off the sidelines so that it's no longer dry powder and is actually being deployed? So one of the things that we at the AIC have done is we've put together some policy recommendations to lawmakers as to what you need to do to get that capital deployed. And one of the biggest findings that we had was this political dysfunction and the lack of certainty that exists within our political system right now is one of the biggest things that is keeping this capital where it is and not being deployed. But I think the governor is exactly right, that what you need at the state and local level are these real pilot programs to show how P3s can work. Because there is a significant number of people in the country that are automatically dismissive of seeing KKR be involved in a water project, for example, which has been wildly successful in Bayonne, New Jersey. They would not have been able to update their water systems were it not for that kind of private capital investment. So one of the things that we're doing as an association is trying to demonstrate that over and over and over again, that this is not something that you should be afraid of. But the real leadership here has been at the state and local level, and I think will continue to be there, because generally the states and localities are working on a much more bipartisan way on these big issues.
So when you talk about making the case, when we talk about making the case in private infrastructure investment, your view is that we shouldn't be holding our breath for anything great to come from Capitol Hill?
No, absolutely not. I mean, you see a situation where we just had this big tax bill that was primarily deficit financed. We just had a big budget-busting appropriations bill that Congress just passed. So you have to ask this question: where's the money going to come from? Who pays? And as a consequence of just those two big actions in the president's first year, there's going to be less capital to be deployed from the federal level. And that political dysfunction is seeping into this, into preventing the United States from making the significant infrastructure improvements that actually have to be made. And my concern is that is seeping significantly into the state and local level as well. And it's going to continue to crowd out the ability of states and localities, and of course the federal government, for making the improvements. So as a country, I think we need to start having this conversation as to where these resources come from. We have record amounts of dry powder in these private equity funds. It's not nearly enough by any means to make up the gap, but it has to be part of in all of the above strategy to fund our America's infrastructure needs.
So nothing much is going to come from Capitol Hill, Governor Snyder. It's all on you. You're going to have to fix. So how do you see the role increasingly of the states in this role, facilitating public-private partnerships, really making them happen?
Yeah, there's 2 or 3 levels to this, and I don't want to get too complicated about it, but from a public policy point of view, the first question is how do you get the resources, the funding, because ultimately P3s are not free. I mean, you need a fee structure, you need some way to compensate the private party, and how do you make that happen? So I'm proud in Michigan, we've just done something in our transportation side to get $1.2 billion more a year. That's a significant investment. I'm proposing actually a water infrastructure fee. And I'm doing this as, I'm a conservative Republican. These are the right investments we need to make.
You're just a tough nerd.
I'm a nerd. Well, the numbers show you need to make these investments.
Yeah.
So you have that question. The real benefit we need to keep pushing harder, though, is the performance metrics. And this is the part that I think P3 people tend to jump over because it tends to be too much of a discussion on capital and not enough discussion on good long-term performance. And I can say this from a government point of view. We have terms of office. We have budgetary cycles. And if you look at one of the major problems with the underinvestment in the state of our infrastructure is there was not consistent maintenance done. There was not consistent reinvestment that a rational private party in a 20 or 50-year horizon would say, we need to do upkeep the right way. Where if you see these ups and downs, that's many of the reasons it's costing us more than what it rationally should have cost. And I would encourage the industry to be much more proactive about promoting, it's not about us getting our return, it's how we can perform better over an extended period and deal with one of the deficiencies that's structural to government in many respects. So that's a big piece of it that I encourage people to think about more. The other one in Michigan that I'm really pushing, because it's not just about more money, is the whole idea of integrated asset management. And again, I think there's an important role for the private sector to say, I tell people the illustration is think about that road in front of where you work or where you live. How many times have you seen it torn up for road work, then it's torn up for gas and electric work, then it's torn up for water and sewer work, and then it's torn up for communications? And if we can have parties working with us to say, you put this together and coordinate it, because we did the survey in Michigan. We are actually a leader in the country on integrated asset management. We're just getting started. But there are 3,000 entities doing the infrastructure in the state of Michigan. That's not necessarily a rational number, but one of the reasons it's never been addressed is how do you get 3,000 parties to work together? We need more partnership to make that happen.
So Susan, I mean, you see thousands of these deals. I mean, and we have this pot of money, and we have all these projects ready to go. Why do you think that hasn't happened more? Why only is it in certain areas that we've really got our act together?
Well, I think there are a number of examples in the US where we have seen private sector investment being very active and successfully adding to infrastructure capital in this country. And we actually, in this case, I think need to have a multiplicity of solutions. So we need to look at the fact that in the utility sector, private utilities, in the midstream sector, in the real estate sector, we have capital that's gone in under various structures, whether they be MLPs or REITs, that's gone into build out, for example, our pipeline infrastructure. We have regulatory arrangements in the utilities sector which protect consumers, the community, allow for a return on capital. We're seeing a significant amount of capital in the utility sector being invested by private entities, private utilities in long-term resilience, in decarbonisation, in smart grids, in general maintenance. And so one of the things that we need to really think about is where can we pick up the sort of protections that we're looking at in PPPs and apply a regulatory construct, for example. I mean, we have 52,000 water utilities in the US, and 8% of them serve 80% of consumers. How do we bundle water utilities together, put a framework in place that allows sensible regulation and allows investment in, I mean, people estimate it's somewhere between 600 billion and $1 trillion over the next 20 years that we need on the waterfront. And at the same time, apropos of Governor Snyder's comments, we actually have this issue, which is people aren't necessarily used to paying for good infrastructure. They're not comfortable with paying tolls. So somehow we need to actually, change that mindset and put in place arrangements that allow this this situation to be reset, if you like.
So John, I mean, a cry from the governor to, he's doing everything he can, but there's more that the private sector could do, both to facilitate these deals, to help to make the case. I mean, how do you see the role of the private sector, of the actual investor, in trying to get more momentum into the market?
Sure. So just to level set, MetLife is an institutional debt investor. So we do not participate on the equity side. So we're pretty much at the top of the capital structure. From our perspective, one of the things that we've seen as a fundamental need is really an evolution of the 3P market. Now, we're talking about 3Ps, and they're not a panacea. We're going to need a little bit of everything to make sure that we meet this gap. And that gap is estimated to be $5 trillion by 2040. In fact, last year, the gap grew by almost $200 billion. So the effect on GDP, the effect on jobs is tremendous. From our perspective, what we think needs to happen, specifically on the 3P side, is there needs to be a little bit more sharing of the economics post-debt service. And what I mean by that today, if you look at equity IRRs, we're probably sitting somewhere in the neighborhood of 8 to 10% in total. And there's fundamentally a lot of money, equity money, debt money chasing assets today. What we think can potentially happen is that once the equity partners bid on a specific 3P project, when that concession is actually negotiated, there has to be a bit of profit sharing post-debt service where the actual public entity, while they are ultimately retaining ownership, they are privatizing that asset for a defined period of time. The economics post-debt service means that once most of that cash flow goes back to the equity, a piece of that should go back to the state as well. What that will allow for the states to do is to go out and fund what we would consider to be non-revenue generating infrastructure projects, courthouses, schools, hospitals, things that do not have a revenue component such as toll roads, toll bridges, things along those lines. In essence, what you've been able to do then by really creating a partnership is in effect create organic infrastructure. And that will really propel growth, propel job growth, and propel the economics of whether it be in that state or ultimately in that nation. We think that's an evolution that needs to take place. We've seen the 3P model evolve from the UK to Canada and Australia, and we think that that model, when we talk about best practices, can evolve and really take a look at how the states themselves can organically grow their infrastructure without having to put on balance sheet financing.
And I guess that to some extent, where the biggest infrastructure gap is maybe in the deteriorating kind of roads and some of the water infrastructure, whereas maybe the private sector is slightly more interested in already privately owned assets. I mean, how do you think we might overcome that hurdle?
Well, I think, for example, what you just said is accurate. If you look at that $5 trillion gap, most of it's in that surface transportation. So we're talking about repairing existing potholes, things along those lines. If they're not tolled roads, then either they're going to be financed on balance sheet through municipal bond GOs, or you're going to need to eventually have availability-based 3Ps. And so what I spoke about earlier is a way that you can then funnel that money through and proactively take care of those roads or that surface transportation need. I think what the governor said is incredibly important here, that the integration of and making sure that you can holistically look at how you want to update your infrastructure is probably of prime importance. That has a huge multiplier from a savings perspective. I think it's a tremendous idea where a lot of states can leverage off of what Michigan is doing.
Yeah, so Mike, from your members' point of view, I mean, one of the things that's been talked about is the political instability, but one of the quite encouraging things that was talked about a few months ago was the potential for taking some of the grid out of the system in terms of things like permitting. So in the absence of the big panacea of a big federal cash injection here, what other things would you like to see from central government that would help us to move forward?
Yeah, so permitting obviously is a huge factor. And we've made some significant progress on that at the federal level. More, of course, should be done, but that regulatory certainty is really going to be important as we move forward on a more significant infrastructure investment. It's just too important, and there's too much money wasted, and it takes too much time. And as patient as private equity is, they can't be that patient, right? And that's where the real alignment of interests occurs. That you have a state or locality that wants to do a significant infrastructure investment, and you have patient capital on the other side. Oftentimes that's funded by the pensioners of that state. So there really is a real alignment of interests here when you're tapping into private capital. But what else do you need? We were pleased to see that in the tax bill, they continued allowing for at least some debt to be deducted for a lot of our firms so that they can continue to make these kinds of investments. So interest deductibility was a key component of that. That phases down a little bit over the time of the tax bill, and I think we're going to have to continue to engage in that debate because debt financing is going to continue to be a significant part of how you fund these infrastructure needs. So permitting, interest deductibility, and then I do think that this continued political dysfunction that had started at the federal level and has started to seep its way into the state and local level does continue to make our members concerned about whether they're making a significant investment, whether that's going to be a sustainable investment as the political winds change at the state and local level. So that's a significant hurdle, and one that there are no real answers to at this point.
And do you think? So we've talked a lot about the money's there. There's no doubt the gap is there. We from the private sector side, we'd love the public sector to do more, but yet we haven't convinced an overwhelming kind of group of people that this has to be the way. There still remains resistance to this. Do you think to some extent the industry's been guilty of not of seeing this as a panacea, of not selecting the right projects, of being less than transparent about some of the things that haven't worked? What we've talked about, what good practice is, and some of what's happened in Michigan. What about how we deal with the things that haven't worked and learn those lessons?
Yeah, and I do think that more of these kinds of pilot programs, like the governor suggested, the more of those that are out there that demonstrate private capital filling a public need, the better off we're going to be. There's a great example in New Jersey, for example, where the Carlyle Group basically entered into a public-private partnership and redid all of the service stations along the interstates in the state of Connecticut. I mean, it was a great example that these state-of-the-art, LEED-certified service stations in the state of Connecticut. But why were they able to do that? One of the ways that they were able to do that was because there was vending machine revenue that really was the basis for that long-term capital return. So you have to continue to be able to answer the question, who pays? At some point, somebody is going to pay for this. And if politicians have decided that we're not going to raise the gas tax or find some other means to pay for this, somehow you have to have a return. And that's the question, the fundamental question that I see that really hasn't been answered yet as we're trying to fulfill these important infrastructure needs.
Yeah. One thing I'd recommend to people, and again, this goes back to the thing about when you have a new area, the lack of understanding is very large. Again, we've got a highly sophisticated panel here, but to the average citizen, we could be talking another language, and we are, in fact. So in many respects, I encourage the P3 players, and I'm happy to help as a public policy person or a public official, is to say, it's like you almost need to start with the short menu. It's like, don't do the sophisticated restaurant menu with 40 different items. What's the menu you can take to public entities to say, here is the simple lighting deal. Here's the simple road deal. Here's the simple building deal. Because P3s work in so many areas. In Michigan, one in particular that I know would have great resonance that we want to work on, and we are, is rural broadband. How do you get broadband connectivity to smaller communities? That's a perfect model, if you think about it, in terms of you'll have a revenue stream. Is it big enough to get the big players excited? No. But if the industry itself said, this is going to help prove the principle of getting people on board, and you do it in enough volume and scale, then it starts becoming worthwhile. So these are the kind of things that, in some ways, when you're doing one-off deals, it still makes it too complicated for most jurisdictions versus saying, what does your McDonald's menu look like? And then as you grow and do more, then you can add more menu items. But keep it really simple. What's the burger, fries, and shake?
So when you're putting your McDonald's menu together, what are the features you're looking for? You want, what are the things that make those burger, fries, and shakes the top of your list?
Well, this is what side you're on. You're got a different set of questions. If you're on the private side, how do you know you've got a consistent revenue stream? How do you know you're going to get a good long-term return? Because that's why you like these investments so much. From the citizen side, how do we know we're actually going to have a better answer than just having the public sector do it itself? And that's quite often getting back to this performance question and to know that it's reliable. The other part I would emphasize is typically it's on the fee structure side, and to be open with you, we're not going to see a ton of toll roads in Michigan. But it goes back to saying we can do road projects, but we have restricted revenue we can identify to pay that. So it's actually helping us define what streams we would have available and how to use those. And then the icing on the cake is any integrated work we can do, all the better. Because that's where you can show huge savings. If you can if you can get a twofer out of it, showing you can actually improve some other part of infrastructure.
So what are the areas that you've looked broadly at this? You're a fan of the tool in the right circumstances. Where do you think it may not work? What have you knocked off the list? And in a crucial area like water, I mean, what are your perspectives on that?
Well, I think that's a great area, because it's interesting that if you look at gas and electric in our state, in most places, those are private utilities. But when it came to water and sewer, they're almost all municipalities, with a few exceptions. There's no rational reason why it went one way or another other than historical artifacts.
Exactly.
So I tell people quite often is we tend to talk about roads the most because you hit a pothole. But if you really look at our greatest infrastructure risk, in many cases it's the water and sewer infrastructure that we don't see every day that can fall apart at any moment. We've had big sinkholes, we've had issues in Flint. Again, a long list of key issues that we need to be more proactive addressing. And those actually tend to have fee structures. So what I would say is, again, this is the very nature of a P3 is I think at a higher level, I would encourage industry leaders to get with some public sector leaders to figure out how do we simplify this model so it can be presented, the pros and cons to both the investor side but the citizen side.
I think that's a great point, actually. At MetLife, what we've tried to do over the last year or so is, as an investor, partner up with our global government relations team in an effort to really work with certain individuals in Congress, state officials, as well as just the Department of Transportation for respective states as well, in an effort to find some type of alignment of interest in how we can move that effort forward. I think one thing that I wanted to touch on, which I think is critical for this effort to truly work, we're talking about the public side and the private side. But ultimately, there's one other party here that has to benefit, and that is the taxpayer themselves. You can imagine where I'm from in the state of New Jersey, if someone were to privatize the Garden State Parkway, and a private entity were to bid on a concession, receive $2 billion for that concession for the right to own, operate, and collect tolls for the next 40 years, that the taxpayer is going to ultimately say, well, where does that $2 billion go? How is that being appropriated on a state level? And then I'm going to see my toll rates go from $2 to $4 to eventually $10 in year 20, and where's my property tax relief? Or how am I benefiting? So the key to this 3P program, or any infrastructure program that we have, is transparency, and ultimately laying that out fundamentally on behalf of not only the private institution, where the public entity is going to say, on an annual basis, by the way, we're saving $10, $20 million because we're not operating and maintaining the road. We just received $2 billion from, let's say, XYZ infrastructure sponsor. We're going to use this to help de-lever the actual balance sheet of the state. And then ultimately, you're not going to go out and repair this road every 5 years. So there has to be that kind of transparency ultimately to the public, to the taxpayer, to really move this afoot.
And do you think, Mike, from your perspective, with the view of the voter, I mean, I think there's this paradox. On the one hand, there's this caution, without some of the transparency that John talks about, that we're selling off the country's silver, and on the other hand, you've got a growing frustration with the poor state of infrastructure. Do you think the voice of the voter will become stronger in all of this?
Well, yeah, but I mean, I keep coming back to this, but you have to answer the question of who pays. And I think the voter, they don't like toll roads. They want the free lunch, and that's going to continue to drag this debate down. The president came out recently, a Republican president came out recently to hike the gas tax. It gained absolutely zero traction on Capitol Hill. Because you have, historically, Republicans who are against increasing taxes, even though this gas tax hasn't been increased in 20-plus years. And we've seen in that 20-plus years, the fleet change significantly. And we have to figure out a new way, a new mechanism to deal with that. But the idea that even if Democrats take control of the House or the Senate next year, that they would be contemplating a gas tax hike, I think is also fantasy. You have a middle class in particular that until this tax cut really hadn't seen their wages go up in 10-plus years. And so the idea that right now that you're going to increase taxes on gasoline when people are finally starting to see their taxes go down And this is a tax that would significantly hit the middle class. I just don't see a scenario where that's how this plays out in the next.
So who do you think should pay?
Well, I think that it does have to be, as I mentioned, an all-of-the-above approach. Of course, the taxpayer has to have some stake in this. States and localities, of course, have to, and that's ultimately the taxpayers. But there is a role for private capital here, which hasn't played a significant role in answering this question. But it could be a part of the solution, but it's not the only part of the solution. So I do think as you look at this, we have to be approaching it as an all-of-the-above approach.
So Susan, do you think that there's a case to be made for well-executed P3s actually generating value by some combination of more innovation, of allowing a more outcome focused approach, perhaps of driving earlier investment, which in turn gets a benefit? Do you think that's the answer to the unanswered question from my left?
I think it's part of the answer, but I think it picks up on this transparency point and the point about cities and states actually looking at what assets they've got, what obligations they've got, what they need to own, what they don't need to own, and actually laying out a plan and saying, well, we don't need to own this mature toll road. We don't need to own this water utility. We are going to put this into a concession for the next 20, 30, 40 years with a range of appropriate protections, and we're going to use the money to do this, spend on schools, hospitals, whatever it is, and this is important for us as a community, and that's why we're doing it. So it really, it really does come back to this transparency point, because I think everyone realizes that municipalities are fiscally constrained. They don't have the financial flexibility to lock into a whole lot of long-term contracts to maintain every asset they've got, so they have to choose. And now is the time to lay out these plans. And then I think the other thing that we really need is we need to have more flexibility for the private investors to come in alongside the public sector in the way that tax-exempt regulations are structured. And there was quite a lot of thought put into that in the plan that the administration put out to try and actually provide that range of choices and that flexibility to municipalities when they're looking to build new infrastructure.
Yeah, I think, again, this is where I think we make it too complicated, because ultimately you go to the point that was being made is ultimately the taxpayer is going to pay. The citizen is. And are they going to pay through it through their taxes? Are they going to pay through it through a fee? Are they going to pay through it through a toll? The question is the efficiency of the performance and the ability to generate capital or have it available and to get a reasonable return. Because again, that's the challenge you're always going to get from a citizen point of view, is feeling they got a fair deal. And that they're net ahead versus behind. So we should never forget that. And then the part that I think is coming to the realization of our citizens is we do need to invest in infrastructure. I don't make decisions based on polling, but if you go out and poll, infrastructure now is near the top of the list of issues that concern our citizens. The roads have been the easiest illustration, but again, water and sewer. And we've underinvested for decades. I mean, the classic is we did integrated asset management. We put in the Q line, this light rail line in Detroit. And when we were gathering all the blueprints of everything we were finding underground, because it's the oldest road in Michigan, Woodward is the original road in Detroit, basically. They actually found blueprints that had a note on them about make sure you remember to feed the horses. So that gives you an idea of the age of this infrastructure. But as we look towards the future, a great illustration of opportunity, I would say, is mobility comes. And we're doing this on our roads now, that we're making smart highways. So this is the new mile that's coming out. It's not just about the road itself, but we're putting smart communications, DSRC units, it'll be 5G. It's like, how do you finance all those communication things? And that opens up a broader world to say, what about the data? So there is an emerging mile there, along with this old world of saying, how do you find the stuff about feeding the horses, to looking at the brand new world, this new world that isn't even out there much yet about mobility, and your car's doing as much talking as it's doing driving. And how do you work through the monetization of that in an appropriate fashion.
And the P3 model is actually a good model to use if it's properly procured to get the private sector to come up with the innovation that you need to have if you're building an asset that you're going to own for 20 or 30 or 40 years. So it then also comes back to procurement. And do we have forward-looking procurement? Do we have the right checks and balances in our procurement systems at the public level? How can we improve them?
I think there's going to be certain assets that are going to be prime for the municipal bond market. There'll be certain assets that'll be really ready for the traditional institutional type of market. The one thing that I will say is a comment was made in yesterday's panel, which I think is extremely accurate, is there needs to be some shepherding from the federal government. And as was stated earlier, the only lever the federal government has today is the gas tax. That's really it. It accumulates that gas tax and then redistributes it out to the states. But when you look at it, I don't think the taxpayer really realizes that in addition to a federal gas tax, there's a state gas tax. So if you're driving in Pennsylvania, you're paying 39 cents a gallon for the federal tax, and you're paying another 45 cents for Pennsylvania state tax. People don't really realize that. But there needs to be some shepherding and some standardization from the federal government to help some of these states that may not have an idea of how to move this across. It's in their best interest to do that. Now, can they redistribute the gas tax in a certain way that incentivizes some of the states to help move things along? Can they go out and really thank some of the states such as Michigan and Virginia and let's say Florida that are moving that effort along and use that as sort of a blueprint? Possibly, but there needs to be more than just saying, outside of the federal gas tax, we're pushing it all to the states, you guys figure it out.
Well, it's getting worse from the federal side. I mean, they haven't changed it in well over 20 years. So in Michigan, it took us 20 years to get an increase done. It took me 4 years of work, 3 attempts. We increased our gas tax and our registration fees to the tune of $1.2 billion a year. That's going to help a lot. At the same time, our federal gas tax number is down $275 million a year. That number's not going to improve because if you think about it, as you go to more electrics, hybrids, everything else, they're in the gas tax.
That's right.
So structurally, there's a major problem here that needs to be addressed, and the federal government does need to step up and look at this as an important investment in our infrastructure.
So I think time to go out to the floor. Any questions for the panel? You've got this once-in-a-lifetime chance to ask questions, this august team. Yes, sir, at the front.
So, Governor Snyder, taking input from you guys on the value and necessity of transparency is particularly important to me. I'm a municipal investor, and so I appreciate how states and localities have kind of enjoyed two things that have contributed to the complexity here, which is one, they've enjoyed tax-exempt financing for a long period of time that doesn't necessarily encourage more sophisticated private capital. It depends heavily on retail. The other thing is states aren't really regulated from the standpoint of transparency and disclosure requirements. And if they were, maybe they could be obligated to be more forthright in kind of the balance of efficiencies with where money comes from and where it gets spent. That's a pretty offensive suggestion, probably. But how do you think the federal government itself is a little dysfunctional, and leadership has to come from somewhere, but it probably needs a regulatory oversight in there being more of a requirement for states to be consistent and transparent in the disclosure of their finances. Does that resonate with you? Is that too offensive? How do you think about that?
No, I think if it's a transparency issue, much of what we do is relatively transparent. I mean, our checkbook's online. We report all this information. You can go look. Our procurement process, again, there's major reviews to that. What I would say is the piece that I think we can do a better job, and in Michigan I think we do a pretty good job, is asset planning. It goes back to this thing about talking about what's our long-term vision, because that allows the private sector to integrate better, to find opportunities to participate. And I think it's more important that we open up our processes. We already give out all the data. It's more, are we as open to saying we have private parties come in to give us their ideas on how they could do it better? We could improve that. And that goes back to, we're still learning about P3s. So in Michigan, I can tell you, I'm really happy if someone's going to show up. Have we structurally built our model well enough to do that in an ongoing fashion? That's still a work in progress. So I'd love to have that discussion with this group and others to say, how do we open up our process so it's not just our MDOT or Department of Transportation or someone just assuming they're going to do all the projects. But how do they do it the right way with oversight? And it could be provided by a private party or a public party.
Yes, sir. 3 rows back.
Hold on.
Yeah.
What about talking about who's going to be doing the work after these projects are done? I mean, when I read I've been both in the private sector, now I'm in the public sector myself. And, sometimes I read stories about, it's been taken away, the jobs have been taken away from the public sector. They're private jobs, they're non-union, they don't pay, What about things like that? Are you guys thinking about that, and who are you talking to? I don't even know if I read these stories and it bothers me, but I don't know if the general public, if that's part of the perception of these projects.
Yeah, what I would say is I would say on the major projects, that's not really what happens. Because, again, we do have private parties doing a lot of this work. When we do our major road construction, we're using contractors. And when we do the maintenance work, quite often we may be actually going out to the counties to provide our maintenance services, based on their section of the road. We bid all that out. And if you look at it, they tend to be still union people. Again, the larger contractors. When you get to small contracts, you can find it to be more non-union. But again, I don't think you're going to see a huge difference in terms of the traditional large contractors tend to be in the traditional model.
Yeah, just to echo those comments, I think what we've seen, and we've engaged in a number of greenfield construction projects, that equity sponsors or sponsors of those infrastructure projects will usually bid those projects out. I think what's interesting, though, and is maybe just a slightly different look at things, is at 4% unemployment rate, it's going to be very hard to find skilled labor to do these projects. And so, in fact, when you look at the administration's proposal about maybe building vocational schools, things along those lines, I think it actually dovetails nicely with the infrastructure effort. I remember about 15 years ago when we first financed one of the premier LNG facilities that there was a shortage of specifically welders. And welders could pick up and move from project to project, and at that point, almost double what they were getting. So that shortage actually should really propel some more fundamental growth. Now, I would think that sustainable job growth is going to come from more greenfield, brand new infrastructure rather than just repairing existing or modernizing existing brownfield infrastructure. But there's a huge effort there to mobilize an existing middle-class labor force and couple that with some vocational schooling to really help this effort forward. You're going to need that eventually to move this forward. But we've seen a lot of large infrastructure projects really go out and subcontract out that work.
That's a great point. I just reinforce that. Our biggest need are more welders, more operating engineers. And again, my top priority has been talent. And how do we help these people get these good paying jobs because the openings are there?
Any other questions?
Oh, here. Someone on the panel I mentioned before that there may have been instances where in a P3 transaction the public sector was able to participate in equity returns along with the private sector. I'd like to hear about an example where that actually happened. I think the public understands that a P3 could translate into increased fees, increased tolls, what have you. I think they'd be more willing to maybe shoulder that burden if there was also communication from the private sector as to how they could also benefit from increased potential returns.
So I made that comment. I don't think it's happened yet. I think it's an evolution of the 3P market. I think when you look at the amount of actual capital that's out there, specifically on the equity side, you have, for example, on a number of 3P projects, 5 or 6 equity sponsors bidding on that project to become that preferred bidder. And so they're laying out there fundamentally their best price, the structure of that transaction within the concession arrangement that they have articulated with the public enterprise. My point is, I think if you looked about 10 years ago, IRRs for equity sponsors were somewhere in the neighborhood, for core infrastructure assets, were somewhere in the neighborhood of 15%. Currently, a core infrastructure asset's going to return 8, 9%, 10% if you're lucky. What you're seeing is a number of those equity sponsors reach down and really finance what we consider to be core plus or core plus plus assets in an attempt to reach for yield. those assets are not core infrastructure assets, but they're logistical assets that help support the infrastructure project. Slightly different, a little bit more risky, and hence the reason why you're going to get some incremental return. With the amount of equity money that's out there today, if you're looking at a 3P project and you guarantee an equity sponsor an 8% IRR, and you look at where interest rates are today, still relatively low, there is a way that you can structurally and financially structure that transaction so that there can be some excess cash flow post-debt service, post-paying the debt, whether it be the institutional investor, the banker, whatever it may be, that there can be some profit sharing to a certain extent where the public enterprise or the state, let's say in this case, can benefit during the concession period and not ultimately wait for that concession to run out. The other thing which I think is very important, and we've seen in the past, and we talk about best practices, is, if I give my example earlier, if the state of New Jersey were to privatize the Garden State Parkway, and a local equity partner were to receive $2 billion for that, for a 40-year concession arrangement, in year 20, if they sell that for $4 billion, some of that incremental $2 billion that's coming to them has to go back to the state. Because that ultimately, and we've seen this on a couple of 3P projects, where the party comes in, they sign that contract for a 40-year concession arrangement, they sell it in 10 years for double the profit, and they exit. That will not work. Ultimately, what's going to happen is the taxpayer, the local government's going to see that they've left some money on the table. It's very hard to forecast what that actual asset's going to be in 10 years, what the value of that asset's going to be. So during that sale process, which the private enterprise has the ability to do, they need to share some of that increased return.
So we've got a few minutes left. Just in 30 seconds or less, I'd like the panel just to say if there was one thing they could do or would want somebody to do to better make the case for private investment in infrastructure, what would it be and who should do it? John?
From my perspective, I think standardization of documents using best practices, as the governor has said. Maybe it's just the proximity of where Michigan's located. Maybe it's because of the Gordie Howe Bridge or the Ambassador Bridge. The ability to partner up with the Canadians has really resulted in that state specifically moving that infrastructure effort forward. I would love for government officials such as the governor himself to kind of come together to help create some type of a overall a group or a council that can advocate the use of, in this case, 3Ps and how to better finance some of the infrastructure assets that we have.
That was 2 things in 45 seconds,
Sorry.
but good. Mike?
I would say if there was one thing that I could do, it would be we need significant federal leadership here that is lacking. And I think without that, you're going to continue to have this piecemeal approach to America's infrastructure needs.
Susan?
I think focusing on the procurement side, I agree with the last 2 comments, so I'll just add to that. Focusing on the procurement side is really important because we are in a world where we're seeing disruption in almost every sector. We're seeing rapid technological advancement. And so somehow getting to a more standardized approach to procurement where we can really pick up the benefit of private sector innovation, life cycle costs being taken into account, and use that to drive better P3 procurement in the future. And also picking up on the alignment point that that was raised earlier, which is something that we see a lot in other countries. And we've seen tried here, it hasn't quite gotten to the point of success.
Governor?
I start with the premise that we have an infrastructure crisis in our country that is not going to improve, that I think you're going to see an increasing awareness over time. So in that environment, I think there's a great opportunity, and I'd reinforce the comments already made. I think the best thing that could happen is a P3 of the private sector and the public sector coming together to figure out how you define what is a best practice, how do you show pilots that are successful, how do you show standardization, how do you get it out to put it to the average citizen about how you're getting a better outcome, and then showing the private sector how it works. So I think there's a lot of simple steps that could be combined in some convergence between these groups, not just on the project itself, but on the whole principle of what we're trying to achieve to address this infrastructure crisis.
Great. Well, on that note, it remains for me with 34 seconds left to thank you in the audience very much indeed, and most of all to thank the panel for their time and their great thoughts. Thanks very much.